Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on why the new Insurance Act matters now. Last week, President Bola Ahmed Tinubu officially enacted the Nigerian Insurance Industry Reform Act, NIRRA 2025. This follows the Senate's approval of the insurance bill in December 2025 and its subsequent endorsement by the House of Representatives in March 2025. The NIRRA is a landmark piece of legislation aimed at modernizing Nigeria's insurance sector with the goal of accelerating the country's advancement towards achieving a $1 trillion economy. What the Act does: 1. Repeals and consolidates outdated insurance laws into a modern and unified legal framework. 2. Introduces stringent capital requirements. The Act mandates a substantial increase in minimum capital requirements. The new classification and capital requirements are: life insurers from 2 billion naira to 10 billion naira. B. Non-life insurers from 3 billion naira to 15 billion naira. Reinsurers from 10 billion naira to 35 billion naira. Additionally, all insurers must always maintain a minimum capital adequacy of 100%. 3. Mandatory insurance proof for motorists. Drivers must provide their name, address, and proof of valid insurance either in printed or electronic form when requested by law enforcement. Failure to comply may result in a fine of up to 25,000 naira. In the event of an accident causing injury, the driver must present their insurance documents immediately or report to the nearest police station within 24 hours. Failure to do so can incur a fine of up to 50,000 naira. 4. Mandates compulsory insurance, e.g. motor vehicles, public buildings, work compensation, to bolster consumer protection. 5. Full digitization. The law promotes the digitization of the insurance ecosystem, including licensing, product approvals, claims processing, and regulatory filings, all to be conducted via NICOM managed digital platforms to improve market access and operational efficiency. Also, an electronic form of insurance proof is now acceptable. 6. Timely claims handling. Strict deadlines with penalties for delays, as all claims are expected to be settled within 60 days of notification. 7. Enforcement and penalties for unlicensed agents. Unlicensed agents face severe consequences of up to 500,000 naira fine, 6 months imprisonment, or both. Courts may also order refunding of collected premiums. Companies dealing with unlicensed agents risk penalties up to 25 million naira for individuals or 50 million naira for corporate officers, with potential 2 years prison sentence. 8. Policyholder Protection Fund, created to shield consumers if insurers become insolvent. This is to be funded by 0.25% of each operator's gross life premium income to provide relief in cases of insurer insolvency. 9. Regional integration. Supports participation in schemes like the ECOWAS Brown Card system for cross-border insurance coverage and settlement claims within the region. 10. Enhanced supervisory powers for NICOM to enforce compliance and foster innovation. 5 companies, ICO, Mansard, Cornerstone, Lasalco, and Mutual Benefit, are classified as composite insurers, each with a proposed recapitalization requirement of 25 billion naira. The remaining 12 were PIC, NEM, Consolidated Hallmark, Sunu, Guinea, Veritas Capital, International Energy, Prestige, Linkage, Sovereign, Universal, and Regal are classified as non-life general insurers, each required to recapitalize to 15 billion naira. We believe these reforms will significantly transform the insurance industry landscape. The recapitalization requirement might be particularly challenging for smaller companies, considering the current sector fragmentation and other hurdles. Consequently, we anticipate numerous mergers and acquisitions as underfunded firms strive to meet the new requirements within the 12-month deadline set by the National Assembly. These reforms are a key stepping stone towards the government's ambitious vision of nurturing a robust $1 trillion economy by 2030. They harmoniously support pivotal initiatives, including the revitalization of the banking sector, the transformative 2025 Investment and Securities Act, and the groundbreaking 2025 Tax Act. In the coming months, we will keenly observe NICOM's directives and watch the industry, especially our listed insurers, react to their strategic plans for recapitalization and compliance. The market reaction has been notably positive. Insurance stocks on the Nigerian exchange rose by 10% immediately after the signing of the act, the NGX INS index gaining 36.3% since Tuesday. Beyond the rally, it is worth noting that several insurance stocks have historically traded at deep discounts, suggesting further upside potential. We suggest that investors stick with strong insurance companies and avoid moribund ones. We believe that these reforms will bolster the resilience of well-capitalized institutions, empowering them to thrive even further. In contrast, less robust insurance firms may find themselves facing tough decisions, ultimately leading them to consider mergers with stronger companies or potentially withdrawing from the competitive landscape altogether. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed and have a great week. Bye.